Hey, Jesse here. This is the 10% move. So, welcome back. Right, so please be advised that I'm not a financial advisor. I'm just a regular guy out here doing an experiment, if you like, with $3,000. So, basically, I'm putting this $3,000 in the stock market and I'm scanning the NASDAQ 100 and picking up three stocks that I think are going to make a 10% upswing move for the next 30 days. I mean, this month, that's what I think. Those are the stocks that I think are going to make these 10%. And I pick them and I talk about them here. Now, I also give you the rationale of why I think these stocks are going to make a move of 10% this month. And basically, the ones that I have selected this time are, well, I have selected just one this time, which is the AVGO. There are two more that I'm going to be talking about probably tomorrow or the day after. But right now, AVGO, which is Broadcom, is the one that we are going to be talking about. And the reason why I have selected this particular stock is because when we talk about the trend and the structure, specifically talking about the price right now at 354.15, we can see that the bias of the trend is very bullish. All right. So now it is testing the upper half of the linear regression channel, which is a indicator or an indicator we can say that I use. I like it. So I like that one more than many others. So it is touching that upper half of the linear regression channel, and that was after a multi-week consolidation. Usually, when these stocks consolidate, they make an abrupt move, either up or down. In this case, it is up because the trend is very bullish. Now, I also use the exponential moving average, the 20, the 50, and the 100 and the 200 in many cases. But right now, the 20, the 50, and the 100, they're all at 341. That's the 20. The 50 is at 326, and the 100 is at 300, and they all are stacked upward, meaning that this is a confirmation of a strength, long-term strength. So that is a great indicator for us to choose that one. Now, when it comes to the current candles the current candles, they show selling of 0.8% after sitting at $363 in the intraday, but that is not a big deal. It was like a controlled pause that we saw there, but it's not an actual breakout that we should be worried about. Now the momentum, we use the RSI 14 for momentum, and right now it's sitting at 54.4. So the RSI cooled off a little bit from the prior 63 to 65 zone, which is usually the neutral bullish zone. And now there is no bearish divergence here, and this RSI remains above the 50 midpoint, and that means that buyers are still in control. So this is a bull's market for this particular stock. All right, so they're just digesting the gains. Basically, some of them are cashing out a little bit, but it's nothing crazy, not like a sellout or anything. I also take into account the volume, and for this particular stock, we can see that there is a volume of around 20 million shares, and that is slightly below the recent average. But however, this implies a healthy consolidation. It's not like a crazy breakout, but a healthy consolidation, which is not like a distribution or anything. It's just consolidating. Now, the prior upstick in the volume was near the 340 to $345, which was confirmed that buyers I mean, was confirming that buyers were stepping in and getting some more. Now, when it comes to the entry zone for our quick 10% move, we can identify a few zone, for lack of better terms. And for example, the zone of 347 to 352, it would be excellent to re-entry. And that is near the 20-day exponential moving average, and is usually a very good entry point. The target zone, which is the 10% we're looking for, we can find it at $387. I mean, the range between 387 and 390. So that is the upper regression band, which is the prior high zone, and that is basically where we want to land. It may run higher, much higher than that, but this is our conservative target. Now, it is always good to set up a stop loss, and in this case, it's no different. Uh, and I suggest the zone for the stop loss to be around 337 to $340, and that is just below the 20-day exponential moving average, which is the last support cluster. Now, in terms of the risk reward ratio for this particular stock, we have a 2.5 to 1 risk reward ratio, which is very favorable setup for us. Now, I mean, in average, I mean, let's say in general, we can identify this stock with a very high confidence, and there is like an 82% likelihood for us to get this 10%, which is very good. 82% likelihood. Now, when it comes to the interpretation of the momentum reset, AVGO is in a reset, then go kind of thing. That's why we say that it is consolidating. It's in that consolidation phase, and that was after a clean rebound of $340, which was the support. Now the bull channel, the bull channel we can see here, when it comes to the price, it continues to respect its regression trend, and there's no breakouts as evidence at all, just like we said. And when it comes to the consolidation within strength, we can say that it is I mean, it's pushing above the 356 to $358, and that would be so that would confirm the next leg higher toward the $385 that we are looking for. So we only have to be a little bit cautious when it comes to closing below $340 with an RSI of less than 50. That would indicate short-term momentum. That would indicate that the short-term momentum is about to fade, and then that is where we have to basically prepare our stop loss or get ready to get out in case that it gets there. Right, so in summary, we can say that AVGO, or Broadcom, remains one of the strongest semiconductor trend names right now. So it's above every major exponential moving average. It is consolidating neatly within its regression trend channel, and is holding bullish with a very bullish structure. And even at the $354, the risk reward remains very solid for let's say, a 10% gain within the next 7 to 20 days. This upswing aiming, just like we said, around 387 and 385, $390. So the verdict for this particular stock, what I think and why I think so, it is that we have to continue holding this stock. We got to continue to hold, And if we can add a little bit on the dip, that would be a very good idea as well. It is a very high confidence continuation for this setup uptrend. We see that the RSI and the volume, the behavior, all are bullish, very bullish. So this is my recommendation, and this is why we think that this particular stock, AVGO Broadcom, should be held still. And that's basically all for today, folks. Thank you very much. If you like this content, if you enjoy this content, please hit the like button and subscribe. Also, don't forget to hit the notification bell button so that you don't miss a thing every time that we come here with some updates on our investments. All right, so as of right now, once again, thank you very much for watching, and I'll catch you on the next one.